our next panel is all about embedded finance, both the current opportunity and then also where we're headed in the future. On our panel, we have Damien Go from Thread, we have Marie Florian Kellett from Shape, Luke Fawcett from Go Cardless, and moderating the panel is Dylan Burke from DLA Piper. Thank you.
Thank you so much, and welcome everyone. Great to be here with you today, and I'm glad that our panellists have already had their introduction because I've got a very esteemed bunch up here, so really glad to be here with them. We're here to talk about embedded finance, and I thought I'd kick it off with just a quick overview in terms of what embedded finance is. We've obviously got three respective organisations up here, and it'll mean different things to different people, and obviously in the room as well, there'll be different perspectives. So maybe Mari, if I start with you, just to kind of run through what is embedded finance, and also why is it so important?
Thanks, Dylan. I think embedded finance is really that layer from the experience all the way back through. So unlike where I think you've probably talked about, or banking as a service has been something that you people have been using in the past, that tends to be more a broader set of services. But embedded finance is that ability to embed a financial service into and wrap it around and wrap your services, services around it, but it is very much about how do you take it from the customer experience all the way through.
I'd sort of like to talk about what embedded finance is in a couple of different examples. The most prominent one that I'm sure everyone in the room has used is Uber. So the idea of Uber embedding payments into the experience of catching a car or a ride is the most prominent one that we all live and breathe today. For us at Go Cardless, the way that we embed payments in particular into the experience is by enabling payments to be a part of a billing or an accounting ecosystem. So rather than have all of your accounting practice or all of your billing operating over here and then all of your payments operating over here and the two not talking to one another, we've got about 400 partners around the world that embed our payment service, which is about experience, compliance, risk, billing, and all those sorts of things into their platform. So payments can be, living and breathing inside a business's ecosystem.
If I elevate it up, to me, embedded finance is the ability to take financial services beyond traditional players in a much broader level than we do today. So the exciting part about, for me, being part of financial services is, as an industry, we represent a quarter of the world's economy. If you look at embedded finance, what's exciting about it is every business in the world touches payments. What's important to a business? I want brand loyalty. I want to take your money. I want you to purchase something from me, and I want you to repeat that purchase. But purchase is the operative word here. Payments is the lifeblood of every business. So if you can remove friction and through that payment process extend the value chain beyond your own value chain into financial services and cross-sell insurance and cross-sell lending, credit, and other things that are complementary to what you do, then why would you not want to do it? Every business has the ability to be a fintech to some extent.
And I think that's a really good segue because that's the what. I want to kind of explore the why as well. And obviously, Damien, you've mentioned that it's a massive industry. There's so much opportunity. I really want to talk about that opportunity. Why should fintechs be interested in it? Why should large financial institutions be interested in it? Why should regulators be interested in it? What are the opportunities?
If I go back to what I just said about what businesses want, it's loyalty. And we're in a digital age. The expectations on the experience that we receive just keep going up and up. And as someone does it better than we do, that loyalty shifts. And so I think the critical thing that everyone needs to be conscious of is data is king. And the way that you access that data, deliver that data, and use that data to provide a seamless experience becomes the differentiator between whether this is the product that I want to use versus the other. So the Uber experience is a good one. I don't use a traditional taxi now because the experience is so much better, and I don't have to pull out my card and pay and tap and have problems at the terminal within the taxi. It's seamless. It's invisible. It's behind the scenes. And you take that experience and you apply it more broadly. I like the Tesla experience, and Tesla, if you don't know what they do in the States, a big part of their revenue now is they cross-sell credit to you. So they're getting you to get easier access to credit to buy the car in the first place or to upsell you the car. But then when you got the car, they actually monitor your driving behaviour to work out how much is my insurance premium, should it go up or down based on the way I drive. So if you speed a lot, you're in trouble. But if you drive really conservatively, your month-to-month premium is going to be really low. And it just automatically bills you at the end of the month based on the way that you drive the car. So once again, you're taking the insurance friction point that used to happen separately, going and getting the car loan that used to happen separately, and you're embedding that into the flow of purchasing and using a Tesla. So it's taking it to the level that I think most industries are seeing. This is where it's going to go. And so where it was very much a narrow swim lane for the traditionals, it's wide open. It's wide open now.
But again, that's where we as digital citizens have demanded that. We have expected that when I get in and out of a car, I don't have to worry about that because we've been exposed to it. We didn't, often as consumers, we don't know what we want until it's actually put in front of us. So the fact is that these these offerings are there, and the bar just keeps moving. So I think it's important from the FinTech point of view, or from new products and services, but it's also important for those that are existing service providers in the ecosystem. So if you take a lot of the tier 1 banks, there's a lot of core capability there that really needs to be liberated by digital experiences, and the ability to move a team and move the capability into that sometimes can be either a little bit daunting or secondly take a long time. And the number of conversations that we've had with financial institutions that said, I cannot expect, I've got my team working on my digital transformation program, I cannot expect to sit still from an innovation point of view for the next 5 years while they transform and put stuff in the cloud. So the embedded finance capability, if done right, can also live next door to that and enable large organisations that have a lot to offer and a lot to lose in the digital world to be able to offer the same products and services, or offer their customers those products and services to be able to innovate and offer build their businesses.
I think the Uber example opened a big can of worms because typically we think about the B2C examples as the most prominent examples that do live and breathe today, but there are so many opportunities within B2B as well that we're starting to see regulation, technology, and business experience expectations and other financial challenges start to bring to the forefront. So I think that's where, for those that are in the room now, we'll start to see change happen relatively quickly.
Yeah. And I want to really unpack the future, obviously, but before we get there, I'd love to just understand a bit more about where are we now? If you each look at your respective organisation's journey, where have we come to? Where do we sit relative to other jurisdictions in the world? You look at the US, the UK, Europe. Where are we on that journey?
A little bit behind. I think that we are playing catch up in all sorts of fronts. But this last couple of days we've talked about access to capital and funding. We've talked about, we're also a smaller country, so therefore the adoption rate can be a little bit behind. But I think there's the classics that you look towards in terms of countries and regions. But I think there's also a lot to be learnt out of some of the sort of maybe not automatically thought of nations such as Israel, UAE is another. Estonia has produced more digital bits and companies and unicorns so there's got to be, and again I think that all comes back to that there is a culture of digital innovation, whereas I think Australia is still trying to learn and work out what is from a government point of view and legislation regulation point of view, what is it we can work with.
That's definitely the reality of the situation. And I can say this without James from Visa throwing his coffee at me, but a lot of the embedded payments experiences that exist today operate on the card networks. I think what some of you might have heard over the last sort of day and a half is Australia is actually at the forefront of real-time bank payments. So we can extend these experiences beyond the use of a card or a digital wallet to a funding instrument that everyone has access to. So I think that's where we are ahead. So, you talk about faster payments in the UK. There's now a whole bunch of people in the US coming together to try and orchestrate, their real-time bank account payments networks. We're already there. Has it scaled yet? No. Christian from Maneuver earlier said, we're only 6 months in, but we're 5 years ahead of some other countries. And that presents a pretty exciting opportunity to unlock these experiences using more than just the financial instruments that people have become accustomed to so far.
Yeah, I've got a mixed view on that one, because if you look at, to your point, Sly, right, we're early in the journey. So in some respects we are ahead, but then in terms of the adoption rate and the availability and ubiquity of access to certain of these things, it's just not there yet. So if you look at the US, apparently 80% of adults have already connected an app of some type to open banking, whereas if you do that statistic here, it's dramatically lower. If you look at the number of people that are connected to open banking and using open banking in some form or another, it's like 7 million plus adults in the UK. Once again, nowhere near that from a penetration perspective here. So I think the underlying challenge there is the access to the data and the whole CDR issue, which I think everyone's very well aware of and we know where it's at. We know the journey we're on, and we'll get there and we'll get better. But I think as a regulator goes, it probably needs to be a little more aggressive than others. And as a regional player, Thread operates around the world. Massively, yeah. As a regional player, we work with our customers in 42 markets around the world today, and you see the variance in terms of the ability for fintechs to actually compete and access the data. And sometimes there's a thin veil. It's talk, but it's not action. And there's been a lot of talk here, but unfortunately the action's a little bit slower than the talk. So
It's a really good segue, because we're obviously staring down the pipe of lots of legislative reform. Obviously, as a lawyer, it's near and dear to my heart. I'd like to just unpack a little bit more about where that policy focus should be. You look at the white paper that the Australian government's produced, it talks about Australia being a global powerhouse. We've talked about playing catch up. Where do you think the focus should be in terms of that policy? I mean, and to kind of frame it in a slightly different way, if you look at other sectors where there's been lots of attention paid to legislative reform, like AI, that tension between fostering a culture of innovation and allowing companies to innovate versus tightly regulating and striking that happy medium. How do you guys see that all playing out in embedded finance?
I think some of the terms that you used were the guide insofar it's a balance. It needs to be thoughtful in terms of is it encouraging innovation? I mentioned the UAE before in terms of sandboxing. I think that is something that I think the fintech community would welcome, the ability to come in and understand it. For our business at Shape, we are both a platform as well as a license holder. And what we continually come up against is the education process for a number of our clients who we are going to enable the understanding of that regulatory and that license area. So I think being clearer in terms of what the licenses are, I think is going to be a good outcome of the current conversation. The encouragement of innovation and being able to create environments where people can trial stuff would be a great place to sort of expand on.
Yeah, so the encouragement of sandbox environments, testing and learning, starting small and then scaling up is a concept that we have seen definitely play out well in Asia and certain countries. And so I think we haven't seen that enough here. It's not been sort of really embedded into the culture of testing and learning and scaling. I think I really want to emphasise the importance of data, because in the digital world, the access to data and having fair and equitable access to it, and obviously controlling the security around it is really, really critical. We're talking, if you look at the reforms they're talking about in bringing in encryption standards right across the industry, like point of sale, ATMs and everything else. I think where trust has fallen down is with big data breaches and security, and the reality is they're only becoming more prevalent, more sophisticated, and if we don't get on top of encryption and we don't embrace tokenization and we don't ensure that the right security standards apply to everyone, which is part of the undertone of what's coming through, which is it should be fair, and what one rule applies to one should apply to all. And just because it's a fiat currency versus a digital currency or something else doesn't mean it should be treated differently. And because one player's licensed, another doesn't mean it's unnecessarily they should have advantages or disadvantages, so long as the protections are in place. And so I think the protection part's the challenging part, because do you put too much protection in it and restrict it too much, which then obviously stifles innovation? I think there's a really fine balancing act there, and getting that right is really hard. And I think it's going to get harder as we find that the touch points, which is what embedded finance is all about, touch points have gone from being a small number of touch points in financial services to like everywhere. And Internet of Things, like the points of where your value is sitting will be prolific across your lives. But that then means the access points for penetration by fraudsters also become prolific. And so I think that's a really tough one to get right, and it's one I'm going to be interested in following.
Just one last different perspective on that, as always from the three of us, is regulation changing and unlocking opportunity doesn't mean that going off and building it yourself should be the first point of call. There are so many complexities to building out a payments ecosystem. We have hundreds of engineers, hundreds of product managers, hundreds of people in risk, and we still haven't got a lot right. So just because regulation unlocks the opportunity too, doesn't mean that should be the first thing that you should do. There are different variations of partnerships that allow you to maybe white label and own the experience, but not own everything end to end, because it takes years and years and years. And if the expectation is that regulation unlocks the opportunity, and the first thing that you should go and do is build it all yourself is there, I would say that you need to truly understand the complexity that lies between what we all think is really easy. It's not. It's incredibly complex.
Completely agree. I think Go Cardless and Shape absolutely have the war wounds of what does it take in order to put that infrastructure in place, and it's not an easy path, and it's not a cheap path either.
I wanted to pick up on a thread that I think was coming through from you, Damien, about...
Pardon the pun.
Sorry, that's a good point. Just pick up on the point about where does the consumer fit into all of this? Because innovation is great. Regulation is also good to an extent, but how do we ensure that all the consumers have access to these great innovative products and platforms, but also ensure that we're doing it at the right pace, not too slow that we're falling further behind the pace of the rest of the world, not too fast that we have that public distrust just keep shining through? Where do you see the customer fitting within the whole journey?
Like everything is driven by consumer preference, right? It's what the consumer desires, and I think the thing that's so exciting about fintechs is they've nailed the customer experience. They've taken the time to truly understand customer needs across a variety of different use cases and segments. And as a result of that, they're driving the innovation that's needed to be able to obviously create those experiences that the consumer wants, and then shift obviously the sort of traditional players along that journey. And sometimes it's a wake-up call, and there's some really good responses back from the traditional players in doing so. But I think the voice of the consumer obviously needs to be a really big part of this. And when we look at things like CBDCs and stablecoins and all those other things that have the potential to actually just change the way we do things, I know there's a lot of consultation that happens within the industry, but I don't know sometimes whether there's enough consultation beyond the industry. And that this comes down to consumer engagement, more research, not just within a closed circle, but actually take it out more broadly and ask people what their opinions are. Because if you look at some of the consumer research that fintechs have done, it's really glaring kind of what they want. But is their voice being properly heard sometimes when these policies are being created? And I don't necessarily think that's always the case.
I think the default is often to that protective element, isn't it? Like if you look at ASIC's kind of corporate plan over the next 3 to 4 years, it's all about that protectionist stance, and it's obviously very important. You've mentioned data breaches, fraud cases, they're all prevalent at the moment. We do need to have that protective element. But do you have any thoughts on how the consumer preference or how the consumer voice actually does shine through?
I was going to say, there is always going to be people at the pointy end of experience and those that lag. So I think as long as an organisation you don't put all of your eggs in the most pointy-ended, completely invisible experience, then I think if you have a balance, which is no different to having a balance of different payment methods to offer consumers choice at checkout, is another example. Every business we talk to, whether it's an insurance company, a telco, a software company, they are all trying to remove as much friction to increase conversion and then retention as they possibly can. And they will do that really innovatively with some consumers, and then they will leave, BPay as a payment option for others because for the current time, that's the payment method that they trust the most. It's not embedded, it's not frictionless, but it has to exist until we're at a point where everyone is on that bus.
I think we're kind of in a unique situation in that we were B2C. Our origins are B2C, so for Hey Retail. And then because of global circumstance, we realised that we had an asset there that we could reuse differently. So we are B2B to C. So I think what we've done is learnt from our own customer experience and what is it that customers are looking for, and then how do you build the technology to meet that. But we keep rolling with that. So the end user, the customer experience is sort of from a constant iteration of learning through our clients. What can this engine do, or what can innovation do? And if it's not us, it's someone else. Certainly, Thread is very much a part of our ecosystem. And so, what is it that they do to make that customer experience to meet, say, the security and the safety aspects? So it's also about using partnerships as well. Yeah.
I do want to leave some time for questions at the end. So I do want to kind of, end on an exciting note, because I think it is a really exciting time and there's lots of opportunity. People in this room, this is really where all the exciting stuff's going to start from. When we look at Australia's, the government's ambition to be the global superpower in this space, where do you think the opportunities are? Where do you think the focus should be? How do you think we should be putting ourselves on the global stage? And I'll ask each one of you to answer in turn, maybe, or whoever wants to go first.
Well, I think we've all got a list. I'll take one. Yep. So I think at the moment, the conversation around education at the various levels of business about technology, government and private enterprise is key, because we've got segments of government and private enterprise that actually aren't understanding what it is about AI, what it is about safety and security and cyber security and those sorts of things. So I would say education.
I couldn't agree more. Education and a safe place for advisory is where we need to go, because and there are different ways to get that. But we were on a call on Monday and Mari was talking about the white paper, and I've just had my head so deep in other things that I just hadn't had the time to read it from start to finish. So if I'm living and breathing the industry, and it's a part of our business, and I don't know the ins and outs, I went straight to Mari and said, "Can you please send me a summary so I can better understand it?" So creating a safe place for consultancy and advice is almost like where we need to go, day dot.
And that's a really interesting point, because that is legislation and policy catching up to what the industry is actually already doing.
Look, I'll change the topic completely. Just something that's probably passionate for me, and I'm passionate about is I'm a big believer in the benefits of blockchain technology, and I think CDBCs, stablecoins, crypto just generally has a lot more potential than what's been realised today, and the new policies that are coming out theoretically address all of those things. Personally, I think there is ways of moving money at much more cost-effective, faster, more efficient ways than the traditional rails that we have access to today. And so with the right frameworks that build in trust in leveraging these technologies, I think we could really, really change the game in payments and really open up the ecosystem even further. The other thing is just AI. Like, I love the potential of AI. I think if you govern it too tightly, you're not going to realise the potential of it. But the efficiency gains that come out of AI are phenomenal. Like, we, as a business at Thread, we're already using LLM generative AI models on our own website to get access to our documents and speed up the development time for our prospects. As we explore it, we're super excited by the art of possible. Like, super excited about how I can now get a personalised experience using AI. The responses that come out of some of the systems that we're testing and learning and betaing with right now are amazing in terms of, if I go into a chatbot today, it doesn't speak to me like a human. I know it's a chatbot, and I get really frustrated by it, and I don't use them. Whereas some of the stuff we're playing with now, which overlap our data source, our data sets, it's really exciting how much it can tap into the data and actually come back with something that's relevant to me. It's timely, like it's an instant answer. Like, if you haven't used ChatGPT yet, I'm sure most people have. It's incredible. But you start applying that over payments and applications and financial services, and it's pretty mind-blowing, the potential there. But once again, the regulatory framework that sits around that's going to have a huge bearing as to whether that really gets traction and that really starts to touch our lives in a really meaningful way anytime soon anyway.
I think we have maybe a couple of minutes for questions, if there are any in the audience. Maybe not. Well, otherwise, please join me in thanking Damien, Luke and Mari. It's been a really interesting conversation, so thanks very much.